Hey guys, this is the Investors Channel, and today we're going to talk about how the ultra rich are combating tax in the high tax states like California and New York. So, California's tax rate is about 13.3%, while New York's tax rate is about 8.82%. So, those are very high tax rates. But some of the states with the lowest tax rates include Florida, Wyoming, Texas, Nevada. So, while you may think that people from California and New York, they may be moving to states like Texas and Florida to avoid the taxes, well, while that may be true, there are still many millionaires and billionaires that remain in California and New York. So how do they combat the taxes of these high tax states? You can say real estate investments, but lawmakers are supporting this thing called a pied-a-terre tax on multi-million-dollar second homes. Well, pied-a-terre basically means if it's not your primary residence. Maybe you live in Florida, but you come to New York over the summer. Maybe like you have a second home in New York. Well, then there's a pied-a-terre tax that they're trying to support. Also, there's this guy named Kenneth C. Griffin, who is a hedge fund manager. He bought an apartment for $238 million in Central Park South, but he would be affected by the pied-a-terre tax because it's not his primary residence. But this could also mean that if you rent out apartments in Manhattan, you're also paying a pied-a-terre tax. However, fortunately for you, if you have less than $5 million worth of real estate in New York City, then the pied-a-terre tax does not apply to you. But now those millionaires and billionaires who stay in high tax states like California and New York, how do they combat the tax? That's what I'll explain to you in just 1 second. It's this thing called municipal bonds, which are city bonds. So yes, all this tax in real estate and everywhere else, it is encouraging more people to buy municipal bonds. So yes, now as the demand for municipal bonds are going up among rich people, the yield is lower and lower. So that means off of the money that you let the city borrow, you're earning lower interest off of it. However, one of the advantages that the rich like is that they are exempt from the federal tax. All the municipal bonds are exempt from the federal tax. Also, if you're buying the bonds in the state that you live in, then you're also exempt from the state tax. So if, for example, I live in New York, I buy the New York municipal bonds, I'm already exempt from the federal tax because it's a municipal bond, right? But the fact that I live in New York, that makes me exempt from the state tax as well. So that would mean I would pay no tax on it. So it's like a free gain in a way because you're not paying tax on it and all the interest you're earning, it is for you. You don't have to pay tax on it. It's all yours. But does it keep up with inflation? That's a great question. Not too sure. Anyways, guys, if you like this video, please don't forget to smash that like button, subscribe with bell notifications so you never miss out on another video, comment letting me know if you have any questions or concerns, and share. Once again, this is the Investors Channel.